Good afternoon. You're watching Business World Live. I'm Jes Delos Santos. Let's take a look at how the local bourse closed today, Wednesday. All right, all eyes now on the 7,000 level. This is local shares breach. The 6,900 level yet again rising for the second day in a row, up 0.7% to 6,918. Now, Corina Gravia, Virginia Capital, said in the show this morning that investors are rotating back into the index after taking profit following the highs from previous weeks. Question now is, will the index break past the 4-month long 7,000 resistance? Nela Gravio says this is a psychological barrier because investors might take profit once again after hitting 7,000. As for the Fed scare, that's already priced in, says Corrine, and that the BSP's confidence that the hawkish stance of the Fed will not really negative impact the Philippines actually help support this rebound. Now, one of our big winners in today's trade is Jollibee. The restaurant operator is setting its sights on opening 500 stores in North America over the next 5 to 7 years. This year alone, in the pipeline are 50 stores in the U.S. That helped boost stocks for the third day of gains here. The Jollibee is up 1.9% to 210 pesos and 40 centavos a share. Now, a couple of other stocks here exceeded that gain by Jollibee. Here you have the likes of Ayala Land, ICTSI, and Robinson's Retail, all increasing by more than 2%. However, and then on the negative zone here, you have Aboitiz Power in the red after it was told to halt operations of its 3 Benguet hydropower plants. This over some resistance from indigenous people from the area. Now, these 3 plants are the Lower Labay Hydro, FLS Hydro, and Lonoy Hydro. Combined, these facilities contribute a total of 12.4 megawatt output to the Luzon grid. Now, Aboitiz Power already said that it's reaching out to the communities for a dialogue. Aboitiz Power, again, like what I said earlier, ended the day lower by 1% to 24 pesos and 65 centavos a share. Now, outside the main index, let's have a quick check on PAL here. Well, trading is still suspended for the flag carrier, but they did just clarify an Inquirer report claiming that they are expected to file Chapter 11 protection on June 29, while the flag carrier reiterated that they have not approved any definite option yet, meaning they are not aware of any dates and such details as indicated in the article, saying these might just be mere conjectures from sources. Again, before trading was suspended for PAL, they were at least trading at 6 pesos and 5 centavos a share. And lastly, let's have a quick check at Bitcoin, somehow pulling off a recovery here after scaring investors with a 12% dip below 30,000. The crypto surged more than 4%, but despite that gain, Bitcoin has already wiped out more than 50% of its gains since reaching 65,000 this year. Now, some chart watchers are already saying that the currency might have a hard time finding support in the 20,000 range following a drop below 30,000. As you can see right now, Bitcoin still in the green here, up 3.1%, trading at a 33,900 level. With demand picking up in both residential and office segments, is the worst already over for the property market, or is recovery still an uphill climb? Let's get insights from David Leechiu, CEO of Leechiu Property Consultants. Good afternoon, David.
Good afternoon, Jess. Thank you for having me.
All right, so first, let's kick things off with the office market. Sequentially, demand has grown by 22.5% quarter on quarter. What drove that growth, and how much of that is still induced by the BPO market?
Yeah, when I got really excited at the start of this pandemic because in our experience, as the world goes into crisis, more companies will offshore, and part of that destination is the Philippines. In fact, to offshore scalably on an English platform, you can only do that in 2 countries at the moment. That's India and Philippines. And so many companies, true to form, as they behaved in 2008 and 2009, they are doing the same thing, which is as soon as their economy stabilize, which is what's happening in the US now, which is about to happen in Western Europe, you're going to see many companies offshore to Philippines, offshore to India, and they're doing that because of the scale that we offer the market. And despite the fact that the industry started off with 1,000 people in year 1999, 2000, and today it's 1.2 million, 1.3 million people employed. Despite all the hardships that pandemic brought us, the the salary escalation or inflation, the wage inflation in the Philippines has been fairly modest, and it is not in proportion to the growth rate of this industry. And that excites many companies to pump more jobs. And one of the best examples we can give you is Iloilo. We thought that, I mean, you look at Iloilo before, it was inferior to Bacolod. And now, with the combination of the efforts of ILED, which is the Iloilo Economic Development Council, the efforts of Mayor Treñas, and the efforts of all the big developers there, SM, Ayala, and Robinsons and MegaWorld, they've really transformed Iloilo, and to the point where the biggest developer there, MegaWorld, has managed to pre-commit a lot of their office buildings, and we've helped meaningfully in that effort, and they will continue to do more. And many companies that are located in Cebu want to spill over to Iloilo, and unfortunately, MegaWorld is in front of that, and they are making serious efforts to go across the water to Bacolod and replicate their success in Iloilo in Bacolod.
Would you
And
say, would you say then, David, that somehow this signals a bit of a transition here for office demand from the BPO sector from Metro Manila to the provinces?
it is not a or solution; it is a and solution. So the companies need to grow in Manila, and after a certain scale in Manila, they will look at provincial sites. In my 25 years experience in doing this, the psychology of many first time offshores is to be very conservative, and the most conservative decision is to migrate to Manila, and then once they establish scale in Manila, they will do things elsewhere.
Now, moving away from the BPO sector, this time around, let's discuss the Pogo industry. Would you say it's already dead in the water here? And if so, are there other industries here or other emerging industries that we should be taking a look at?
Oh, no, no, no. The Pogo sector is a very resilient sector. It's one of the most resilient sectors in the world. And while we had a hiccup in the last 12 months, 15 months because of the pandemic and the disputes it's had with the BIR, I'm happy to say that it seems that that's been largely addressed with this new law that's been passed by the Senate, by Congress, and it will lapse into law in a few weeks, and that is with the endorsement of the DOF, very important. And then once that law happens, it will give a platform, legal platform for the Pogo sector to come back. And they haven't really left. They've only contracted by 25%. And I think the rebound of the Pogo sector will be much bigger than we've ever seen before. Because yes, the Chinese market is a big component of that market today, but it is not the only market, and we will see the entire Pogo universe descend on the Philippines. That's very exciting. And the one other piece that we have to do is to open up the airways, because right now the foreign market cannot come to the Philippines because it's very difficult right now. They're prevented from entering the country or prevented to leave their country of origin. But when that changes and we open the airways again, you're going to see this massive influx of Pogos come back here. And as you know, some people don't like them for a few reasons. But frankly, the economic benefits of having Pogo operate here in the Philippines is much, much bigger.
Oh,
And we need that at a time of this pandemic, and it will accelerate our path to recovery and prosperity.
Okay, of course, one of the areas in which Pogo's, of course, boosted take up, especially when it comes to residential areas. Talking about that, you have condominium sales badly affected in 2020. Are we finally seeing a reversal this year?
We have been seeing a recovery since the third quarter of last year. It was it was tripped a little bit by the second lockdown that we had early this year, but I can say that it's fully recovered, or not fully recovered, but it's on its way back to recovery. And the middle class segment and below was hit hard because those are the guys who lost their jobs, lost their bonuses, lost their investments. But the upper middle and above, those guys are doing really well because they've learned from the past crisis, last two crises. They know what it means to be liquid. And now that they are liquid, they're picking up opportunities and investment opportunities. And for example, some of the high-end condominiums today, the developers are offering fantastic payment terms at higher prices, but at payment terms. And the market, the buyers have responded favorably to that. Now, it's not just the condominium prices, right? So the velocity of pre-sales is picking up again, and that's exciting, and that's across a number of sectors in the property residential condominium market.
Now,
That's exciting.
David, let's talk about rental rates. How much have rental rates softened, or is it as drastic as previously thought of or expected?
So rental rates in the office sector have been fairly resilient. And yes, while there were some dips, for example, the Bay Area is hit hard, and the Ortigas area is hit very hard. They're down 20-30%. In some cases, not all, because there's a lot of stock there that was vacated or new stock that's just entered the market. But in Bonifacio, in Makati, in Alabang, in Quezon City, the rates have been fairly resilient. In some cases, actually, in most cases, the renewals are done higher than the last lease because they were done at 5 years ago when the base was lower. And so when they're renewing at higher levels despite the COVID situation. Next is that 99% of tenants have renewed their rent. 98% of tenants are current with their lease. And so they continue to pay rent even if they're not using the space.
And then lastly, now before we let you go, David, let's talk about tourism. Online interest remains high. Give us an idea which locations, to be exact, are gaining that traction, and do we expect this to translate to actual receipts?
I am very excited about tourism. I think that that will be the biggest industry of the Philippines 10 years from now, within the next 10 years. And I'm very excited for Pampanga, the Pampanga region, predominantly because of the kicker that Clark Airport will do. And when that terminal opens in August of this year, it will have a transformational effect because North Asia tourism will find it easier to travel into the Philippines using Clark as a destination. They will land and leave on time. The roads out of Clark are fantastic. They are global quality roads. The destinations in North Luzon is fantastic. If you go from Poro Point, Pangasinan, La Union, all the way up to Pagudpod and Benguet, it's fantastic, gorgeous. And then Clark will work very much hand in hand with the Visayan airports. And what many people don't understand is that we built 7 to 9 airports in the last 10 years. And some of the best airports in the Philippines are found in the Visayas. You've got the Cebu airport, you've got the Puerto Princesa airport, the Tagbilaran airport, Iloilo airport, Davao. I mean, and then Siargao, and then they've got a number of airports yet to open or rehabilitate. We're excited about the Bacolod airport when it gets rehabilitated. I'm excited about Poro Point in the north when it gets rehabilitated, and that's going to spur tourism because it will give foreign tourists a totally different experience from what it is getting today.
All right, some high level of optimism there for the tourism sector. Thank you very much for your time this afternoon. David Leechiu, CEO of Leechiu Property Consultants. Thank you.
Thank you.
Here are other headlines we're keeping our eyes on. Moves to digitize tax evaluation and collection processes are expected to boost LGU's real property tax collection by at least 100 billion pesos. The local governance reform project will likely increase real property tax collection by more than 60% from the 70 billion pesos collected in 2019. The finance department says share of LGU's property tax collections to total tax collections has been declining since the local government code's enactment in 1992. Helping out in the reform program is the Asian Development Bank, which allocated a total of 16 billion pesos since late 2019. The ADB is planning to lend close to 20 billion pesos for the program this year. The Energy Department wants the National Grid Corporation of the Philippines, or NGCP, to fast track the acquisition of much needed power reserve supply. The DOE issued the advisory less than a week after the power grid operator announced its plans to hold a competitive public bidding for reserve energy supply. The NGCP was also instructed to have dispatchable reserves that will replenish contingency reserves. All this comes after power disruption issues in several areas in Luzon earlier this month. The DOE also insisted that reserves should be procured through firm contracted arrangements. And those are the biggest stories this trading day, June 23, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe. Philippines.